Hello everyone, I'm Kenneth, and in this video, I'm going to walk you through 10 things I wish I knew before I started Forex trading. As we start, ensure you follow my page as I'll walk you through every lesson I've come to learn. Before I entered the world of Forex trading, I truly wish someone had been honest with me about what lay ahead. The countless nights spent staring at the ceiling, the devastating emotional toll of losses, the intense burden to generate income overnight. So many of the lessons, I had to discover through difficult and painful experiences. Today, I'm revealing the 10 most significant truths I desperately needed to understand before I ever executed my first trade. This knowledge will spare you countless months of aggravation and could potentially save you a significant amount of capital. So, let's begin. White heavy checkmark Lesson 1, Forex is not a shortcut to wealth. In my earliest days as a trader, I was under the impression that Forex was a simple path to rapid riches. I was convinced I could turn a small investment into a large one almost instantly, and that mentality nearly ruined my chances entirely. Success in Forex isn't about the desperate pursuit of large windfalls. Rather, Forex is a journey of cultivating patience, expertise, and self-control. The moment I quit trying to rush the process and instead concentrated on truly understanding the craft, my entire perspective shifted. Here is the reality: progress, even if it's gradual, is still genuine progress. And being steady and reliable will always outperform being merely fast. If your sole reason for being in Forex is a desire for instant cash, you will consistently face disappointment. However, if you approach it as a long-term skill to be honed, your potential will be limitless. Lesson 2, Your survival hinges on risk management. A painful reality that every trader eventually confronts is this: you have zero control over the market's movements. The only thing you can truly command is your own exposure to risk. In the past, I would allocate far too much of my capital on a single trade, driven by the hope of a rapid payoff. Without fail, every single time I took on excessive risk, the market would teach me a severe lesson. The principle of sound risk management is straightforward. Never put more than 1 or 2% of your account on the line in any single trade. You must guard your trading capital as if it is your most vital asset. The traders who endure in this business for the long run are not the ones who trade the most, but the ones who most effectively control their risk. Remember, your primary objective in trading is not to make a profit, it is to prevent catastrophic loss. Lesson 3, You will have losses, it's inevitable. At the beginning of my journey, every losing trade felt like a direct reflection of my own inadequacy. It made me feel incompetent, as if I was fundamentally failing. But in time, I came to a crucial understanding: every single successful trader experiences losses. It is a normal occurrence. It is to be expected. Losing is an intrinsic part of the trading profession. What truly separates amateurs from professionals is their reaction to a loss. Do you act out of emotion and immediately jump into a revenge trade? Or do you analyze the event, extract a lesson, and use it to become better? A loss is not a definition of failure. A loss is a piece of data. It clearly indicates where there is room for improvement in your approach. Lesson 4, The power of patience. Not every move is a trade. There was a phase where I felt compelled to have an active position every single day. I mistakenly equated constant activity with being productive and effective. However, I learned that excessive trading is among the most efficient methods to wipe out both your financial account and your self-assurance. The ability to be patient is, in fact, one of the most powerful assets a trader can possess. On many days, the most profitable decision you can possibly make is to do absolutely nothing and stay out of the market. Be selective and wait for clear, high-quality trading signals. Wait for the market to confirm your analysis. Wait for the conditions to perfectly match your defined strategy. A single, well-defined high-probability opportunity is far superior to 10 trades taken on a whim. Lesson 5, The foundation of success is unshakable discipline. It's possible to possess the most profitable and sophisticated trading strategy on the planet. You can be an expert in advanced concepts like smart money concepts, price action, order blocks, and liquidity. But all of that knowledge becomes completely meaningless if you lack the self-control to adhere to your own predefined rules. Finally, make sure to follow this page for more valuable content, as I will be regularly posting insights and documenting my personal journey of growth as I work to improve every single day. I appreciate all of you. Lesson 6. Maintain a detailed trading journal ****. This is a practice I deeply regret not starting from day one. A trading journal reveals blind spots and personal tendencies you would otherwise never see. You must record every single trade you execute. Document your rationale for entering. Describe your emotional state at the time. Note the outcome and the price action. And, most importantly, conclude with the key takeaway. When you make it a habit to analyze your journal every week, you will begin to identify recurring themes. What you consistently do well. The repeated errors you make. And the specific feelings that lead to poor decisions. Think of your journal as an honest mirror reflecting your trading self. True development requires this deep and regular self-analysis. Lesson 7. Commit to a single strategy ****. In my past, I was constantly hopping between different trading methods. I would use indicators one day, explore ICT the next, and switch to SMC the following week. This left me in a perpetual state of confusion, overload, and erratic performance. The pivotal moment in my career arrived when I finally selected one single methodology and dedicated myself to mastering it. Every established strategy can be profitable for someone. But no strategy on earth can ever yield results if you abandon it before giving it a real chance. True expertise is born from relentless practice and refinement of one thing, not from dabbling in many. Choose your trading system and stay with it. Learn its every nuance. Improve it over time. You will build unshakable confidence through unwavering consistency. Lesson 8. Learn to read market structure. While chart patterns can be helpful tools, they only provide a partial picture. To genuinely thrive in Forex, you need a firm grasp of overall market structure. You must learn to ask the right questions. What is the underlying trend of the price? Where are the pools of liquidity located? Can you identify the key areas of supply and demand? Has the market broken its established structure? Once you become skilled at interpreting the narrative that price movement is telling, you will no longer be making simple guesses. You will begin to act with anticipation and foresight. Market structure provides the essential background. And having that context provides the clarity needed for high-confidence decisions. Lesson 9. Backtesting is the key to self-assurance. I understand that backtesting might seem tedious, but it is genuinely one of the most fundamental habits of any prosperous trader. When you repeatedly test your trading setup on historical data, you begin to develop a genuine trust in your strategy. You build a foundation of confidence. You significantly diminish feelings of fear. You eliminate destructive hesitation. Backtesting provides you with empirical evidence and reveals the objective reality. That your strategy has a historical edge and is profitable over the long term. But this is only true if you execute it with discipline every time. And only if you allow your trades the necessary space to develop according to their rules. Lesson 10. Your greatest challenge is yourself. This is, without a doubt, the most profound lesson I can share. Your primary adversary in trading is not the market itself. It is your own internal psychology. Fear will cause you to exit winning trades prematurely. Greed will tempt you to risk more than is prudent. Ego will persuade you to deviate from your proven rules. At its core, trading is a battle of the mind. If you can achieve mastery over your own emotions, you position yourself to master the markets. But if you allow your emotions to take control and master you, your trading performance will forever remain unpredictable and volatile. Those are the 10 crucial lessons I needed to learn before I began my Forex trading journey. They cost me a significant investment of time, capital, and mental well-being to fully understand. But if you internalize these principles and apply them seriously, You will bypass years of struggle and heartache. Always keep this in mind. Approach the markets with patience. Execute your plan with unwavering discipline. And above all else, prioritize the protection of your trading capital. Thank you so much for your time and attention. Please subscribe to the channel if you found this valuable. And I would love to hear from you. Please leave a comment below telling me which lesson resonated with you the most.